Yeah, welcome back, welcome back, welcome back. So we are in that silver bullet time window I told you we'll be tape reading and executing on. So right here, this is a silver bullet. So after the CPI damage, okay? So after the CPI damage, you wanna trade the silver bullet, okay? Usually when we have these high impact news at 8:30 New York local time, you wanna hunt for setups or entries in the silver bullet, okay? So here we are. So of course you understand all these higher time frame levels. This is the daily fair value gap high, daily fair value gap low, the 30 minutes inversion. So yeah, we are looking to go long. We are looking to buy down here. All right. This silver window time bullet. I mean the silver bullet time window. Silver bullet time window. And let me blank that. So yeah. So we're going to take trade this. We also below the midnight opening price. So we are at the low of the day. Yeah. So and I expect price to sweep above this high, which was created in CPI news release, and back above the midnight opening price, which happened right here. Okay. This was some sell side. So I would like us to get our entries down here, rally back up above this high, which was created at CPI release, then above the midnight opening price. Okay. So yeah. So we have immediately we break above this swing high. Let me get the close out of the way. So you understand these higher time frame price levels. So we are here to execute and take read only, right? Yeah, we also did some macro analysis yesterday, and yeah, of course, you expect what we you know what to expect in price, right? So yeah, so immediately we close above this high to be a type 2 reversal, market structure shift right here, a type 2 reversal, and we'll be looking at these two down close candles. It's our bullish order block. And don't expect price would come below the midnight, the lower end of this daily fair value gap. So watching to see, watching to see. So yeah, we're going to buy, Actually, I've taken my buys. These buys. We have a lower time frame market structure shift. Let me show you. It's in 1 minute. Yeah. So in 1 minute. Now we have a fair value gap. All right. So this was the market structure shift. It was in New York. Had a lower low, lower high, lowest low shift in market structure. So in silver bullet, as we were coming back into this fair value gap right here, I took my buys right here, right there. So I'm already in this trade, but for the 5 minutes, we have not yet come for the discount level after displacement. So we have already closed above right here. So we are going to push higher. And this is market structure shift with the type 2 reversal. So watch in this fair value gap. So this was a first entry in the lowest time frame, that the 1 minute. So you might get something like an I offered institution order for entry into this, then push higher. Otherwise, we have this the lower end of the daily fair value gap as a strong support. And we also have these two down close candles as our bullish order block. Okay. So this is our bullish order block. This is the fair value gap. So if the market comes back down there, shoot and kill. So I love my liquidities. I mean my order blocks below. So yeah, right there. So in silver bullet time window, and a setup is just formed. We have market structure shift right here, and we have a discount fair value gap and a bullish order block, which must not be revisited because we have spent a lot of time down here. The sweeping this low, which was created in what CPI release, CPI release. So you don't never treat the news, okay? Stay out, be a professional, okay? Stay out, stay out. Okay, so any drop lower, it's a fake move. Any drop you see, it's a fake move, okay? It's a fake move and we expect expansions higher. So I would like to see price tap at least this the low end of this the lower end of this the daily fair value gap. Okay, so if it taps here, you can get your entries, but this one is also an entry plus the bullish order block. But this level, the lower end of that daily bullish fair value gap is a very strong support. So let's see if it will manage to get back into this fair value gap, which might give us an high offered like an institutional order flow entry drill. Okay. Yeah. So yeah, I'm watching to see if we will bounce off here, rally, or we will come into this fair value gap and get that high offered institution order flow entry drill. Okay. But basically, this is the bullish order block, these two Dankus candles. This is the high end of this bullish order block. This is the opening price of this bullish order block. And we are trading in the New York Q zone, okay? And right here, this is the low of the week, okay? So we have done the analysis, we have done everything is has been defined before this tape reading session. So you understand what we are doing. So this is the low of the week we were hunting for. Because I remember in our trading plan, we were hunting for the low of the week during CPI release. Let me check it out. No, it's not this chart. The other one. Sit? No, it's this one. Let me check. Yes. DXY CPI at 1530 hunt for the low of the week. So we had everything in plan. So and Monday stay out. We were not trade on Monday, which we didn't. Tuesday we had the low of the week during CPI release, which happened, and I've said this is the low of the week. Okay. So in that trade, so tomorrow GDP, pound, gross domestic product news released as 10. This is where we are going to hunt for another setup in London. So because tomorrow we don't have dollar news, only pound news. Since we are trading pound, we will hunt for a setup in this pair during the London session. What? We have Friday, Thursday, Thursday, DXY PPI 1530. It will be a good day to hunt for expansions higher. Yeah, so we have everything in plan. So, and this was for the risk entry. For the risk entry, we would have gotten our entries there and stop loss below. But since we had CPI, I said categorically that don't use the pending orders. We will wait until the silver bullet. That's when we are going to engage. And that's why we are here now, okay? So I suppose that you have taken your trade because I've said when the market is coming back to this support level, the high end of that daily fair value gap, the low end, you can take a short, okay? But we expect an institution order flow into this, then institution order flow entry drill into this, then expand higher. So this is my first, would be my first entry. If I am not in a trade already, I would use this level as my first entry. And stop loss is below this swing low. Do you see this swing low with the order block and the fair value gap right here? So this should look like this. My entry will be here, and my stop loss will be right there. Yeah, right there. We can target higher, 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 higher. So since it's the low of the week, we are going to hold these trade routes today, tomorrow, Thursday, and Friday. So towards the close of Friday, that's when we will get, or when our TP levels have been hit, we will close the profits systematically, where we get 50% off at our first TP, 70% off at the next TP, and 100% off to the final TP. Yeah. So previous week high up there is our first TP level from our entry down there, and it will be a risk reward of 1:10. Okay, it will be a good move. It will be a really, really good move. Again, that level up there is the previous week high, the closing, the high of Friday. You can see this is previous week high, which is also our buy side liquidity and our drawn liquidity. So when we get our entries down here, we will get let's say 70% off here. Then we can swing like 30% to the rest of the liquidity pools up there. Okay. But yeah, I hope you have taken your trade now because we're going to expand now. So we are down here for execution and tape reading. So as I've said, my entry would have been on this, the low end of that daily fair value gap, because why? It's a very, very strong support. So this gap is reasonable to leave it open or get an institution order for entry deal, then expand. So you have a bullish order block, entry right there, stop loss below here, then you can expand higher. So let's see. Alright, so expect expansions, and this trade we are going to hold it more than 1 day because we are at the low of the week. I outlined in London, we did the analysis and I outlined. So go through that video again and check where I categorically thought on retouched on one shot, one kill, and I explained that below the Sunday's opening price, we are the low of the week. So this is that low of the week currently. And we are also the low of the day of today's daily candle. So two Q zones. So low of the day, low of the week. And we get our entries down there. And we can swing it for more than 1 day. So once we get this entry, the reason it's called one shot, one kill, it's just one shot, then we can kill it throughout the week. So from this entry, we are going to hold it throughout tomorrow. That's day you can cross towards the end of Friday, or when our TP levels have been hit, as I've shown 50% or 70% at the previous week high, then we can swing the rest to higher, higher levels of liquidity pool. Okay, and this is it. This is the low of the week right here forming, and anybody missing this, they will witness this thing keep going higher, higher, higher. When the market is up there, we will be looking down and uh be like, wow, so our stop loss is such small and our TP is such huge. Yeah, but as for now, it might seem risky to get in here and stop right here. Once we start expanding higher, the risk will keep on minimizing. Okay, actually, after we cross the today's midnight opening price, we will move our stop loss at break even or even below this inversion fair value gap right here. So below here, and we will be good to go. So we are coming to that bullish order block after all. So right there, that's another entry into that fair value gap. So institution order flow entry drill right there. So from that gap, I would expect expansions higher. Okay. So right there, that's the gap entry. So in the next 3 15 minutes, 5 minutes candle. So in 15 minutes, I would have expected some form of huge expansions higher. Okay. So we are catching that low of the week. So the optimal entry down at the weekly candle week. Okay, the low of the week. The way we catch the low of the day. Now you are catching the low of the week, and we can hold this trade routes tomorrow. That's the probably Friday in London. Coming mail. London. So I'm watching to see how this current candle closes. Then we'll have enough information to decide whether we're going to expand right away. So that was your entry. Again, if you have not taken, then I don't know what you're doing, because the first entry was on that lower end of that daily bullish fair value gap. The next entry was on the bullish order block, and the optimal entry on this the fair value gap after displacement. Okay. After displacement and after market structure shift, you have that gap. That's a high probability entry point. Then you can push higher. Now that's the low of the week. Okay, so you can swing comfortably in tomorrow, Wednesday. I mean, tomorrow is on Wednesday. Yeah? So tomorrow, Thursday, and Friday. So 3 good days, including this one, can be 4 days. Yeah, a nice swing. Okay, from the low of the week all the way up. Of the week, the high of the week. Okay, so I expect the high of the week to be formed on Friday. So we can swing from today up to Friday. Okay. Uh yeah, and it will be some good pips, yeah. More than 200 pips. That's what I'm targeting. So yeah. So we get the buy side liquidity pool on a 60-day IPDA range. 60 day, sorry. 60-day we swept last week. So that's our previous high. Yeah. So when we sweep that, we will have managed like 200 pips. 200 pips. And that's a good number of pips in 1 week. Okay. So yeah, I love how the candles are closing above this gap. And that's good. That's really, really good. So the first candle. So if we close this candle and form a swing low pattern, example, here we have a swing low pattern. This candle wick is lower than this one and the next one. So if we get the same here, yeah, this candle's wick is lower than this one, the next one. Now that confirms we are going long. We are going to get some expansions right away. Okay. So let's see how the next candle closes. Then we can confirm buys. Yeah, of course, we have confirmed with the market structure shift right here, but the entry, we want to confirm that we are going to get the expansions right away. So when this candle closes, we are going to get like a swing low pattern inside this fair value gap, inside this bullish order block at the optimal low of the week, also at the optimal low of the day. Then that's a good trade, and we are going to really explode higher. Okay. Keep watching. Please let me grab a glass of water. I'll be back in like 1 minute. Okay, I'll be back. Yeah, I'm back, guys. I'm back. So we keep watching how this candle closes, yeah. So if when this candle closes bullish, these two down, all these down close candles, precisely this one will be the next bullish order block. This candle, okay. Once it closes above the opening price of this candle, it's the bullish order block right here. Okay, like right here. Okay. So we watch and see how this candle closes. This current candle, and if it closes bullish, then we have created the swing low in this the value gap and also the bullish order block. Right, now we have a swing low, so this thing is not coming down back here, so you can trail your stop loss from here. Now, okay, leave it there for now. When we breach above this inversion, the 30-minute inversion, then we can trail our stop at entry. Actually, we can lock, we can put our stop losses at break even. Okay. Now this candle is the bullish order block. This one, you see this candle. This is the bullish order block. Okay, current bullish order block. This candle.
Incoming mail.
So a close above the opening price makes this a bullish order block, and it's going to push our price higher. Precisely if the market can come to the opening price of this candle right here, you can expect a big expansion of this bullish order block. Okay. Right. Oh, let me pick a call. Let me pick a call. I have a call. Let me be back in 1 minute. I'm sorry for that. Apologies. I'm back. So I want to see expansions. That's what I want to see. And um, precisely, we break above this inversion. If we break up above here, then we put our stop loss at break even. If you entered on this high end of this fair value gap, the low end of this daily fair value gap, if you entered in this fair value gap, and if you entered on this bullish order block, you put your stop loss at break even. That's when we break above here. Okay. So we can extend this session to London close, which is between 11 to 12. Actually, London close is at 12. So we can extend our session to that so that we can see delivery in price. Okay. But majorly, I'm looking up here. This CPI high, a lot of liquidity up here. So this is my first objective, and breach above here. I want to see us rally towards the midnight opening price and above. Okay. So you all eyes up here. All your eyes up here. So our attention is up here, up here, up here. Okay. So yeah, when we break above this gap, it's an inversion, it will be a strong support. Then we can place our stop losses at break even. Okay. When we break above here, put all your stop losses at break even and be confident that it's not going to come below here. Okay. And again, if we can create a gap between this candle and the next forming candle, we create a fair value gap, but this candle current closes above the middle point of this inversion, this gap will remain open. Okay, I would not expect price to come below for this gap. But if we form a gap between this candle and the next, and the price doesn't close above middle point, would expect this gap to be filled and push us higher. So I'm watching to see how this candle closes, the current candle. Watching to see how it closes, okay? Right there we have a gap. So we'd expect a dip into this, then expand higher. It's another BISI, and this is a bullish fair value gap right there. And now we're into that London close time we do 11 to 10, and London closes at 12. Okay, 12 New York local time. That's when London closes. So I would expect a dip into this, then expand. So I said we're going to extend our session to London close and see what our price offers. Overall, we are looking up here. This is where our mind, this is where our eyes are, right here, up here. So deep into this is a BISI. Buy side imbalance, sell side inefficiency. So the market should sell this to make it efficient, then expand. Okay, that's what it means. So yeah, we are digging into that BC. Yeah, right there, right there. Seems like we're going to fill the whole gap. Yeah, but this is the crossing of the silver bullet, so we can expect such. So I'm watching. So watching to see how price behaves. So we have crossed the silver bullet. Now we are into that London close window 11 to 10 to 12, but precisely London close is at 12. Yeah, right. So if we break above this, then our stop losses should be placed at break even, and we can hold those trades throughout the week. Okay, throughout the week. So that means today, tomorrow, Thursday, and Friday, for the better part of Friday, before we get that Friday's high of the week close. Okay, yeah. So from down here, I'm also watching to see how we close above these two down close candles. So if we close above the opening price of these two down close candles, these two down close candles will be the bullish order block. Okay, so be the bullish order block. So price will step into that, then explode above this inversion. Okay. So in this run, any down close candles, see them as counter trends, like fake moves, should be giving you more entries, because this was the first entry down here. Sorry, yeah, first entry. We also had an entry at the bullish order block and the low end of this. If I look up, the next should have been after this candle broke above right here, making this a bullish order block. Next entry right there. This is another entry, but you don't need all those entries. You just need one entry at the lowest point, then run it up. Okay. So focus up here. Your focus is up here. My focus is up here. So your focus should be up here. So I'm seeing these candles expand up to this level up here. So I'm watching now these two down close candles. The next candle closes above them. That makes these two down close candle the bullish order block. Okay. So usually you get used to being patient, okay? Because you must be patient for setup form, must be patient to execute, must be patient for price to deliver into your target zone. So it's all about patience. Mostly patience and discipline, greed and fear. Patience, discipline, greed and fear. But patience plays the biggest point, the biggest what psychological part, then discipline, then fear and greed come next. Okay. And again, all days are not the same. Some days we will get those fast delivery, explosive moves. Like in 5-10 minutes, we will have already reached up here. Okay. But some days are just slow, like today. Okay. And that's the effect of CPI news. Okay. But during CPI release, stay out, because what could you have done here? Nothing. Like, you are not hunting for sales, we are hunting for buys. So, and these are our buys currently. So stay out. If the high impact news are being released at 8:30, that's New York local time, you hunt. You hunt for a setup in silver bullet, like we have done. Okay. So I'm watching these two down close candles. So a breach above that makes them the next bullish order block, and it will be used as a stepping ladder for price to break above this fair value gap, inversion fair value gap. Then all the time our eyes are up here. Okay, up here is where you focus. Okay. So we watch to see if price is going to break above that. If it does, now those are our bullish order blocks. I mean our bullish order block. Yeah. CISD, change in a state of delivery. Okay. So and the slowness in price is the effect of CPI. So yeah. So yeah, if that candle closes bullish like that, it will have already broken that the opening price of that the two down cross candles in that bullish order block. So let's watch and see. So these are the orange zone is our 30 minutes inversion pair value, which is inside the daily fair value gap, right? So you expect some form of resistance, but eventually price is going to break through that because now the order flow is bullish. Okay, yeah, now the order flow is bullish. So any premium arrays should be disrespected and any discount arrays should be respected. Okay. So back into that BC. So all that slowness is the effect of CPI. Okay. And never trade all those impact news. That's the CPI, NFP, FOMC, Fed interest rates. No, never trade those. Yeah. Usually trade the next session. If you must, you trade the next session after those news release. Okay. So yeah. These drops are coming off this the high resistance, the 30 minutes inversion, but eventually we will gain some momentum and break through that. Okay. So back into that bullish order block. So the order block should support price and push us higher. So I'm also watching to see how that kind of closes. Will it close outside that fair value gap, the current fair value gap, or will it close outside of that fair value gap? Okay. So we watch to see how that kind of process. Yeah. So if it closes inside that, inside or outside upwards, outside the and this upper region, if it closes above that, then this was a weak to sweep these lows. And this is where the wicks do the damage, but the bodies will tell us the story. Okay. Yeah. So that's why I watch the bodies, how the bodies close. Okay. The wicks, they usually do the damage. The bodies will always give us the narrative. Okay. So that candle closed inside that fair value gap, and that's good. That means you're bullish. Okay. The wick running into that bullish order block was just meant to sweep some sell side. That's where the wicks do the damage. The bodies will usually tell us the story. So we're still bullish. So I would love to see a violation of this current inversion, the origin zone. Yeah, we expand higher. Okay, back into that BSI, the bullish fair value gap. So we want to see all the bodies close inside this fair value gap. So all the bodies should close there. The wicks can drop outside the fair value gap, but the bodies should stay within this fair value gap. Okay. Yeah, so the bodies will tell us the story, the wicks will do the damage. Okay. So yeah, another body closing within that. That's good. That's good. So I'm watching this candle currently, this one, because it's the last drop before we swept some equal lows down here. So this is my current bullish order block. You can use this one. I will use this one because of the liquidity sweep into this next bullish order block. So this one. So if we close above it, that's the next bullish order block, this candle. So if we close above this candle, this is the next bullish order block, and then price should rip above this inversion, and all the time our focus is up here. Okay, up here. Understand that there are fair value gaps in there, but I'm focused on liquidity on this setup. Yeah. So there we have it. This is a bullish order block. Immediately the opening price was broken above. This is the next bullish order block. That's my bullish order block currently. And it should push price higher. Okay, this bullish order block should push price higher. Okay, actually rip through here, do this inversion. Now then you can start reaching for these premium fair value gaps. But precisely I'm interested in this buy side liquidity which was created during CPI release. Okay, up here. So in the next this candle and the next two candles, I would expect that we rip through this inversion. Then yeah, now this inversion I mean will act as a strong support to the strong resistance. Now it will act as a strong support and will give us that support to run to this buy side liquidity pull up here and higher. Okay. So just a minute, I have another call. I'll be back in a few.